Hi everyone, welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Saurav Gandhi, co-founder of Bueno Finance, a neobank for blue-collar workers. Saurav is a graduate of both NIT Kurukshetra and MDI Gurgaon, and he had worked for companies such as American Express, EXL, Price Waterhouse Coopers, and PayU before starting his own venture in 2019. Saurav was also part of the Y Combinator program earlier this year. So join me to welcome Saurav. Hi Saurav, welcome to ELI.
Hi. Thanks, Priya. Thanks for a warm welcome.
I would request you, Saurav, to introduce yourself to our audience, please.
Sure. So, hi guys. Just a bit about myself. So, I'm an engineer and then I did my MBA in finance from MBI Gurgaon. I graduated in 2011 and then I started working with American Express and then Citibank through EXL.
Mhm.
So most of my career, the first 7 years of my career, were into credit risk model building for US big banks, primarily for the consumer lending portfolios, right? That's
Mhm.
what I was doing where, and I was in US from 2015 to 2017. That's where, I realized that I should head back to India, where the real innovation was actually happening in terms of payments and credit space at least.
Mhm.
So that's where I came back to India. I got a very great opportunity to work with PayU, where I actually interacted with a lot of other founders, very successful founders. And I got an opportunity as a director of credit risk and data analytics, where I was leading a global credit underwriting team for PayU's credit business. Primarily three products in three different geographies, one in India, one in Colombia, and one in Poland. I think that experience inspired me to do something on my own because I was solving, I was very close to solving very great problems at PayU. And that's where, I interacted with my other co-founder also, Sandeep Aroda, where we always wanted to do something, on our own.
Mhm.
And the idea of extending credit to the next billion users in India, I think that really excited both of us.
Okay.
And that's where we took our learnings from our jobs in especially in PayU, and my other co-founder was also working with Swiggy, Cap One, Citibank, all of great companies. So that's where we thought that okay, let's just put all of this together, and that's how we came across idea of starting our own venture, which is
Mhm.
Bueno Finance.
Okay. Tell us about Buena Finance. What is it all about, and what value does it provide to our customers?
Right. So Buno Finance is like Chime for India. So basically, what we are trying to do is we are trying to help the hardworking population of India, which is like lower to middle income group in India, which is more than 500 million users in India,
Mhm.
earning somewhere from $200 a month to $400 a month. So we see that there's a lot of credit gap for this segment, right? Only 10% of the formal credit goes out to this big segment in India, and that too is mostly also secured loans.
Mhm.
So we want to change that story. We are really committed to helping these hardworking people come up the financial curve. So the idea is, we help them with solving their short-term cash needs through our products, which is like instant cash loan and a line of credit products. We help them coming up with, we help them with solving for their short-term cash needs. In the process, we collect a lot of data about these guys. We understand the journey of these customers. We understand the needs of these people. We understand the expense side of these people, thus enabling us to do a lot of cross selling and upselling to these people. So that's the idea that we want to be a single point solution for them for each all their financial needs, basically.
And how does it work from an operation standpoint? Do you have a mobile app where they apply for
Yes,
loans,
yes,
or
yes.
how does it work?
So we have a app consumer app which the customers can download and come up with their requirements, like they can apply for instant cash loan or a line of credit through our app, which is usually up to 10,000 rupee, basically, which can help them. So for example, you are a delivery executive working at a delivery company, right? You are earning, but somewhere you just went back to your village, and you coming back after a week's break. You don't have enough capital to get started back on the work, right? So you want to get your fuel refilled in your bike, you want to pay the rent for your room. That's where you take a small line of credit, a loan. You utilize that, you start working, you start earning, and you repay us the money back. So that's how it works. The other way could be that you hurt your ankle, you want a medical help, you want some instant cash, you can go there and you can get yourself treated, and once you recover you can basically pay us back and continue on the journey. So what we have realized that this segment is very, very hardworking, and the risk also, the perceived risk that we see is very high, but the actual risk is not that high if you are able to crack or understand this segment. So that's what I think we are relying on, our capabilities of understanding data, understanding business, understanding this segment. And that's where I think we believe we can make a significant mark for these people, and this can significantly change their lives. I mean, for us maybe a 10,000 rupee may not be a big deal at times, but for these people, especially when they are trying to start working, or they need to pay a school fee of their one of their kids, I think it becomes really, really critical. And that's where Finance is committed to helping these people.
uh, let's say I am a user of the platform, so what all formalities do I have to go through before I can avail the amount, and against what commitment?
Yeah, I think it's an unsecured credit line. It's a very simple product. You just come, you fill up your KYC details, you tell us why do you need this line, and you just do a basic KYC, photo, PAN, Aadhaar, and that's about it. So it's a very simple 2-minute process, and you're done.
And there is no commitment, even if I don't return the amount, what will happen?
No, so we do have our checks and balances to make sure that people repay. In fact, one of our biggest missions is customer awareness and educating them that this small loan, if you repay it on time, it helps you build your credit history, right? Which will eventually get you other products, like they want to apply for a auto loan, they want to apply for a home loan at some point, they can get it if their record on bureau is good. So I think credit bureau, their history building, I think is one of the critical angles of our business.
So they understand that credit rating is a crucial
I
thing.
mean, they some of them do already. I think thanks to a lot of fintechs that are already there, a lot of awareness is now spreading in India. India is a growing population. Communication is happening really fast these days. These guys also appreciate and understand the importance of credit rating. But some of them, I think that's one of the big challenge, or one bottleneck I think that we need to crack, right? Customer awareness, and that's what we're trying to do.
What is the current scale of operation? How many people are using the platform? What amount
So
of
we are
loans?
more than 100,000, I think 150,000 now, users on our platform. Uh, and we're growing very rapidly. I think we're doing 50% growth, 30 for, I mean, if you take an average of last 6 months, maybe 40% growth over last 6 months, month over month.
Okay,
Yeah.
interesting. For a young company which is just 2 years old, I think that kind of user base and growth is phenomenal. Now, I would like to understand how it all started. With what hypothesis did you start? How did you build the product. Before building the product, tell us about your market research journey.
Okay. I think we started with this. So I think the best market research is talking to your users. I think, and one of the great things that we learned at YC also, user interviews are the best way to judge or see how your product is doing. So as an entrepreneur, even today I spend at least maybe 30 minutes more than that talking to the users. How are they liking the product? Why do they need this? So all the, and of course we started with a hypothesis that there is a credit gap, and we did the research, we read through the reports, and all of it made sense. Okay, there is a lot of demand, and I think demand is something which is kind of obvious also for the segment. But I think that does not stop there. The real research happens when you talk to users, right? So me
Mhm.
and my co-founder used to place multiple orders through Swiggy, Zomato. We talk to these guys. Okay, why do you need money? What is your long-term aim? What are the issues that you're currently facing? All of that, right? And we figured out, I think this segment was very, very abused. Typically, if they need some short-term cash, say 10,000, 15,000 rupee, that will be coming from a private financier at a very back-breaking rates. So it's like once they stop working and they come back to work, I think it took them significant amount of time to just get back to normal lives, right? Because they had to pay so much interest and fees to these guys that it will hamper their cash flows for at least 6 months or more than that in some cases, right? And that on the assumption that these guys are able to work smoothly over the next time. If something else happens, then they just get into a debt spiral, which is very, very tough to recover. So I think that's the situation. We understood the demand, and that's where we thought that we are committed. We would be committed to change the situation for these guys.
How did you find the first few users, the ones who we consider as trial users?
Right. So in fact, we've started with a B2B2C model. We have a B2C model also, but B2B2C where we actually go and tie up with the companies like Swiggy, Zomato, Uber, all of Rapido, Grofers, all of these companies, right? Where we sell this product as an employee benefit to their customer, right? So what happens that on their platform, these guys promote our product. We get into an agreement with these guys. In fact, some of these players also enable payment deduction also, where the payment directly comes back to us.
Mhm.
So yeah, just coming back to your question, right, on how did we figure out. So we started a small pilot with Swiggy, and that's how it started. And it was a great pilot. It was a great validation. The response that we got from Swiggy also, I think they were really excited about the product. So it gave multiple validations from the customer angle, from the merchant, for the B2B player angle. And I think that's how we thought of making it big.
Okay.
Hmm.
Now tell us, how did you find the product market fit? I understand you got the validations, but people who are using the platform, they need to be happy, and a big portion of the uh, uh, users need to be happy for us to say that we have got product market fit. How did you find
Yeah,
achieve
I
that?
think product market fit is something which is, very broad thing, and I'm still not sure whether we are at that stage or not. But I think I can tell that we are definitely working towards it, and we are, in that journey already.
Mm-hmm.
So I think product market fit can be a function of multiple things, like you're able to acquire users. I think that part, I believe it's sorted. We're able to acquire customers in a very cheap way. Our customer acquisition costs are, I think, one of the lowest in the industry. So I think that part is sorted. The another part is retention, and then another part is cross sell, right? So these two angles is something that we're still working on. In my view, I think a product market fit composes of all three angles, but we're still working on the other two, is what I would say. But yeah, I can definitely say that in terms of customer acquisition, we have figured out how to acquire customers in a scalable way. in a cost efficient way, and which actually is making sense for the employer as well as the customer.
Okay. Uh, Interesting. In other words, you are saying you have found some growth hacks, uh, because
Mhm.
in the standard channels, the customer acquisition is a expensive process.
Yes,
Tell
yes,
us
yes.
about the growth hacks that you have done in your model.
So I think the biggest growth hack we figured out in this segment, I think word of mouth is very, very important,
Mm,
right? So the only growth hack, and there is no shortcut here, is to make your customer happy. If they're
mm,
happy with the product, they'll automatically go and promote to 10 other people. I think, and that's the only good way to acquire customers in a scalable way. So
mhm,
you just start promoting your product, but once the first few customers are happy, they understand your product. And I think one thing that we've done is we've kept it very simple to understand, right? For example, all the calculation like fees, it's a very simple example, right? Almost all the players that I've seen, I think they will charge a processing fee, say 200 rupee, right? They will add a GST to it when they are kind of the customer is making a payment, right? So
mm.
we've kept it like inclusive of GST, the interest calculations. I think we've kept it very, very standard and very, very easy to understand. I think that definitely, so these people really love to work or get used to the products which are easy to understand, and they don't want to apply a lot of brains into understand, okay, there's a hidden late fee, there's a hidden interest, there is so many other angles that typically they have seen working with other banks, other lenders, other players. I think that's something that we've tried to avoid completely, and we've got a very great response. So I think customer service and transparency are the two biggest growth hacks. I wouldn't call them hacks, but I think these are the two major tenants basis which we have kind of built this business, and we are trying to build it basis these.
Okay. Since you have attended Y Combinator, I am sure you and your organization would be little obsessed with the North Star metrics. So tell us about what is your North Star metric as a company.
See, I think we want to get to 100 million revenue in next 3-4 years. I think that's what we're aiming towards. So all aim is towards building that. But I think one thing we learned very well in Y Combinator is that you should always aim for product market fit before scaling it big. So I think we've got good numbers, but still, I think I would say we are maybe 50-60% there in terms of PMF,
Mm,
and that's what we're trying to aim. And we will only go big after this. And scaling up becomes really easier, right? Once you figured out all the aspects of business, and that's what we are working towards. I think next 12 months are very critical for our business, and that's what we're aiming for.
did you pivot your model somewhere in between?
Yes, I mean, no, I mean, there were multiple strategic changes that we did. I wouldn't say we completely pivoted, because I think one thing was very clear, that we were very clear about the demand and the customer segment we wanted to go against, right?
Hmm.
I think in fact we have extended our customer segment. We were initially thinking of primarily targeting the gig workers,
Hmm.
but now I think we've expanded it to almost everyone who is kind of making or falling in that income bracket, right? So that's, I think, one change that we have done. From a product standpoint, we're trying to move away from a loan product which is low engagement in nature to a credit line product which is very high engagement in nature. I think that's another big strategic change that we have done to our business model. But I wouldn't say in terms of business model we have, or in terms of vision we have done any pivots. I mean, the vision has always been the same. Of course, there have been some major strategic changes to the product, to the customer segment that we're targeting and all.
Okay. How are
Yeah.
you funding the operations so far? You are giving out loans to people, and that to a very large segment. How do you finance? How do you arrange those amount for the consumer?
So we have our partnership with some of the NBFCs that we're working with.
Mhm.
So we do get, financing to source those loans. We
Mhm.
have a good equity financing as well in the company.
Okay.
So yeah, I think this is that we're trying to do. But if you understand, really look at this deeper, right? The product, the kind of way we've constructed this product, it's not a capital intensive business
Mhm.
because we give it only for 3 months and the maximum amount that we're giving is 10,000 rupee. So the
Mhm.
same money is kind of circling back. So the capital requirements for this business is significantly lower than a typical, lending business. That's how we've constructed this product.
And what about the funds for building the mobile app and getting users?
Yeah.
So cost
So I
associated with
think,
that.
yeah. So we started, with bootstrapping this business. Sandeep and I started this business. We invested some money from our previous savings. I think that's how it started. And then we got some commitments from some angels in the beginning. And that's how we kind of build our initial products. Post that, we got into Y Combinator and we have, raised capital there. I think some of the investors that are on our cap table are very marquee investors now, from
Okay.
primarily from the US networks. From India also, people like Kunal Shah, Anupam Mittal. I think these guys are on our investment table. From US, Twitch co-founder Justin Can, they have started their fund named Goat Capital. So I think they are a significant investor to us. Tinder's founder Justin Martin is another significant investor to us, and we've got great names on our cap table. Like Good Water Capital is there, which is more than a $2 billion fund. And there's many other such names in our cap table now.
Very interesting. Um, Tell us, how did you build the team to build a product and build a venture? How did you find the right people to take your vision forward?
Yeah. Frankly speaking, I think in building a business, that is the most important part. So, as we say, right, people don't build, I mean, as an entrepreneur, you don't build a business, you build people and then they build the business, right? And I'm a strong believer of that fact, right? So of course, when we started a journey, we didn't have a lot of capital to hire, a lot of people at that point. So we started with some people who, started helping us. We took help from our friends also, techie friends especially, who helped us build some initial products. We took all the help from all the people we knew. I think that's how we started. And then we slowly started hiring people. I think some of the initial hires that we did, they really stuck with the company. And I think the kind of culture we created, I think they really kind of felt that it's their own company. And that's how I think I would say one person was able to contribute maybe equivalent to five people at that point. I think that's how, even with very limited resources, we were able to, build the products and achieve a decent scale. And I think now we are building great people. I mean, a great team. We've recently done a lot of hiring in tech, in data science, in strategic alliances. So all the key angles of our business, we are hiring, very smart and great people, and we are always hiring. So, a shout out to the people who are looking, especially the techies out there. So we are always hiring for you. So if you're interested, you can definitely reach out to us. Sorry, I'm doing a little sales pitch there, but yeah.
No issues. Uh, Tell us about the different challenges that you have faced along the way. You seem to have figured out all the aspects of business so far, but I'm sure there would be multiple challenges along the way. Tell us about it.
Yeah. Yeah. So I'll tell you, I think when we started, right, to our surprise, the first product that we built, I think we were built it with great passion. We were able to almost launch in less than 2 months, and we got a marquee client, Swiggy, to do a pilot. And we thought, okay, we've got our best shot, we need to prove this and then scale. And the pilot was exciting, very very exciting. We got very great response from Swiggy, and we got a very great response from our customers. And we thought, okay, things are doing great. We got some initial angel funding also. But then I think we got into some other financial commitments that we were raising. And then COVID happened suddenly,
Mm.
and then all of the equity investments at that point went for a toss. So that was, I think, very hard period, that at that point. So I mean, we were not sure what to do. How would the portfolio behave now? How would people behave now? Everyone was kind of in their own zones, just
Mm.
taking care of the normal or the minimalistic stuff, basically. Even with, for the partnership angle, people wanted things to settle down first before they could talk about new initiatives. So
Mm.
all of that, I think, was very tough, especially from March 20 to August, September 20. I think that was a really tough time. Thanks to our team members, I think at that point, who stuck with us, who still believed on the vision and continue to deliver, things for us. I think one good thing that we did at that point was that we focused a lot on building our products at that point. And because market was anyways very slow, the businesses, we, of course, no one was growing at that point, right? So very few businesses were growing at that point,
Mm.
I would say, put it this way, right? But I think we took that time to build our product and focus on getting the right UX UI on our platform. And that time, I think, really helped us scaling it once things started coming back to normal.
Okay. I had many other questions, but due to constraint of time, I'll just ask one more question. This is my final
Sure.
question.
Sure.
Tell us about the lessons that you have learned as an entrepreneur, which can be taken away by us, and we don't have to go through the same learning phase again just because you have gone through it.
Got it. So I think that's a question very close to my heart. And I think to all the future entrepreneurs or upcoming entrepreneurs out there, right? I would just say it's a very, very exciting journey. It's a lonely journey, of course, at times, but it is very, very critical that if you really want to do right something, or you have any idea, it's very critical that you actually start acting on it. So uh, idea is important, but execution is the thing that makes a difference. I think that is one big thing that I've learned. And there are numerous examples, right? That there was a company who was doing so. For example, Orkut was there, right? But
Mm.
Facebook just replaced it, right, with better execution. Very similar idea, but better execution, better product, right? So many examples like this, right? So idea is critical, but execution is the most important thing. I think that's one thing that I learned. Second, perseverance is the most important quality of an entrepreneur. If you can't hustle and can't beat through the tough times, uh, it will be it will be a tough journey. But I think you have to keep your guards up always. That I have to kind of solve this problem, and I'm completely obsessed with solving this problem, right? I think
Mm.
if you don't have that attitude, it's going to be slightly tougher out there. Third is, the risk to entrepreneurships are really low. You know,
Oh, is it?
people always think that, okay, I leave a very cushioned job, and what will happen if it doesn't work out? It's okay if it doesn't work out, right? Those 6 months or 12 months you try it out. I think even if you tried it out for seriously, committedly for 12 months, I think you will learn enough that that you would not have learned in last 5 6 years for sure. So
Yes.
that learning will anyways take you somewhere else. So, and these days there's so many jobs, and you can always get back to that, right? That should be the last thought that should be coming to your mind, right? But the risk to entrepreneurships have really decreased. Even the VCs and the angels, all the community, they really respect people who are doing startups. even the people who have failed, I think there is equal respect for them, because everyone understands, I think the journey is tough. So whoever has even tried, right, I think they're already one step ahead. So the biggest thing would, I mean, one thing, if I want to summarize it, that just go for it. I mean, do what you really believe into, and don't worry about, whether you will be able to make sustainable money or whether the business will go big. And of course, do your research, but don't worry too much about it. The risks are really low, the rewards are really high, only given you're able to kind of sustain and you're able to have that perseverance to make it through.
That is so true, and I totally agree with you. Risk of entrepreneurship is actually lower than any other pursuit you
Yeah,
may have. Thanks for
yeah.
your time, Saurabh. It was a pleasure chatting with you, and our best
Thanks,
wishes for
Priya.
Bueno Finance.
Thanks, Priya. Thanks for a lovely chat, and thanks for hosting me. I think really great having a conversation with you. All the relevant questions, and I wish all the best to you. I think you are just running a very great platform to motivate people. I mean,
Thank you.
massive respect for you. And to all the upcoming and future entrepreneurs, I think I would just say that, let's be a part of this journey together, and let's help each other out. I think that's the biggest learning that you will get over time. Again, helping each other is the key to success.